Right, hello everyone. Can you write in the chat if you can hear me all okay? I know I'm sort of 10, 15, 20 seconds in front of you guys, so I'll wait till I get a response back. Just let me know that you guys can hear me and then we'll crack into it. Okay, one yes so far. A couple more and we're good. Okay, perfect. Come on, let's crack onto it. Right, so this stream will likely be the similar length to the other streams I've done in the past, but this one will cover more in detailed depth and a deeper dive into the market itself and how we basically position ourselves accordingly. As a lot of you guys know, from January onwards will be a paid service. So this is the type of stream that the guys that are paid members will get access to, and you'll see the level of quality and the detail we go into as to why we have the positions we have and why we have the sentiment we have for the next 3, 6, 9 months time. But yeah, that's the sort of basic summary of it all. But what we'll do is we'll start with on-chain data. We'll take a deeper dive into this and explain it in much better detail so you have a better understanding of what's actually going on behind the scenes, and that will provide you with your level of conviction. We'll then look at external factors that may affect us going forward. This is stuff outside of crypto pretty much, and then we will look at a few charts and potentially the 2K challenge, which we may make some changes to. So that will be the last thing at the end. And I'm not saying we're not doing that at the end. We're not one of those groups that says, oh, stick around to the end so you get this. It's nothing to do with that. We need to get our opinion across, formulate our opinion with all this information, and then we make the necessary changes to our positions at the end because we've figured out what our opinion is. So let's start. On-chain metrics, the first thing we look at is the exchange net position change. So the people that have seen the streams before, you'll know what this is, but I'll explain it to any newcomers or new viewers. The black line is Bitcoin's price. The red and green spikes you see are the net changes in flows of Bitcoin into and out of exchanges. So a net flow out of exchanges is positive. That's what we want to see. That basically means that more Bitcoin is leaving exchanges, being bought up and held in cold storage wallets, as those investors expect it to go up over time. When we see the green spikes, that means you've got a flow of Bitcoin into exchanges, and that means investors are wanting to put their Bitcoin into exchange, more than likely to be sold. You can lend against it and that sort of thing, but it's usually very unlikely. It's usually a negative sign that if Bitcoin's going into the exchange, it's going to be sold. So we don't want to see the green spikes, we want to see the red spikes. So as you can see here, in the May crash we had big green spikes, and then we've had this further accumulation here and in here. But we've seen a slowdown. So let's zoom in slightly more and I'll explain the slowdown in more detail. So we've actually got this candle here today. From the analysis I've been doing the last day or two, which is why I put out the initial post very late last night to say that I have some concerns over Bitcoin, and we were actually at 57, 58k at the time, and we've now dropped down into the 54s. So this on-chain data does show you the signs a few days in advance, which is why it is so important, and it is why we start with it. But this red uptick here is a bit of not a lifesaver, but it is telling us, you know what, this might be accumulated, these price dips might be accumulated into, and that's basically good for us. But as of yesterday, this wasn't here. So I just saw this general downtrend. So I saw that less and less Bitcoin, the net change of Bitcoin flowing into exchanges, flowing out of exchanges is decreasing each day. So that tells me one of two things. That tells me that either the level of accumulation, so the amount of buying of Bitcoin, is decreasing, or we're seeing the level of accumulation stay the same, and we're seeing the selling of Bitcoin increase, meaning the actual whole net change has gone downwards. What we don't want to see, and a very fast downtrend or uptrend, whichever way you want to look at it, but a decreasing amount of the net change could indicate, if it's really rapid, could indicate that we're seeing less accumulation and more selling, exactly what we don't want to see. So this red candle here is good and is positive. So what we'll do now is we'll look into the level of selling in the market, and we'll look at the level of buying to work out which one of which it is. So firstly, we'll go to Well Map and we'll look at the large wallet inflows. As you can see, so for all the people again that don't know, the blue bubbles are points in time at which Bitcoin was purchased by large investors. These are purchases of between 1,000 and 10,000 Bitcoin purchases. So these are the big dogs. These are the big guys that are playing here. The bubbles indicate that the amount of Bitcoin that was purchased and are still being held onto. So as you can see here, we've had 106, bottom right hand corner, you can see 167.6k Bitcoin. So someone bought 167,000 Bitcoin at $4,000 a piece, and they're still holding on to it. So that was a pretty good trade. Up here, the larger the blue bubble, the more Bitcoin purchased. We can see here the last few days, we've had 106k Bitcoin purchased yesterday, 43, 22, 19. Out of this 106k that we saw yesterday, this was initially 133. So somebody has just gone and sold another 423, 27. Someone has just sold, whoever bought that 133,000 has just sold 27,000 of it, probably at a slight loss or maybe even at a break even, just to reduce their risk. So that shows you that there was that level of accumulation, but even these guys, ones that had the big money to buy all of that, are maybe even thinking about de-risking right now. So that shows you the level of accumulation amongst the big boys. Let's now look at lifespan. Sorry, I have a chronological list of everything to go through, so it takes me a minute to refer back to it. We're now going to look at the coin days destroyed. For all of you that watched the on-chain metrics video I posted, I think it was 2 or 3 days ago, I went through a lot of this stuff and raised some initial concerns, so you'll know what I'm getting at. Spikes here indicate long-term investors are selling, so we don't want to see big spikes. Here is okay because you got a bit of profit taking into the price spike. People didn't know what was going to happen. So some long-term guys are de-risking at that point. Notice they don't sell into the panic. They never sell into the panic. They sell into the rebound after it. But here we've had a slight spike. Nothing too significant. I mean, it's similar levels to here and in here. It's not, it's not really that bad. So that's something that is reasonably okay and shouldn't alarm us in too much of a great deal. And just to explain myself more clearly, the reason we focus on the long-term investors is those guys are, that cohort of investor is usually the most profitable. Historically, they've been the most profitable, so we pay close attention to them and we try and emulate what they're doing and align ourselves with that. Let's now look at, we're now looking at all the Bitcoins that age between 1 and 3 months old. So these are short-term Bitcoin. We had some selling into this, the bit of drawdown after the last, not the last all-time high at 69, but the one at 64, 65 before that. So it's not these guys that are doing the selling. So it's not short-term. It's not the 1 to 3 month age Bitcoins. As we can see now, 3 to 6 months, it's not them either. No significant big spikes. We're looking for these sort of spikes. So it's not them either. Now let's look at Bitcoins that age between 6 months and 12 months old. Again, a little bit, but nothing too drastic. Nothing too bad. Nothing to really worry us or anything like that. Now let's look at the 1 to 2 year guys. So this is people that have held Bitcoin from 1 to 2 years. So all their Bitcoins are at least a year old, but no older than 2 years old. So they would have anywhere of a cost basis between, which I think is okay, because they would have anywhere from a cost basis of, we're looking at November 24, we want to go back to November 20. They're having a cost basis of anywhere between 15k and, here's the lowest, and say 8k. So they're well up. They probably don't even care. They would have serious concerns if main trend lines are broken or something like that. So really, you don't want to be watching this cohort. You do want to watch in terms of if there's serious breakdowns or breakups, but in terms of the choppiness between, which is, if we do zoom out slightly, this is still choppiness we're seeing now. So that's completely fine. And these guys have a cost basis, as I said, between 8k and 15k. So we're up sort of 3.5, 4 times their money. So they're probably not even too worried at this point in time. Now the 2 to 3 year guys, this is what's interesting. So as we said, the lowest point between the 2 and the third year. So we're November 23rd, 2021. We now need to look at November 19. So the highest point was in here at 13k, and the lowest point was in 4. So they've got a cost basis of between 4 and 13k. But look, so this is obviously very significant in here, but if we zoom in slightly, just to show some significance. This here was significant by the 2 to 3 year guys. So this is the first metric or the first signal that alarmed me slightly, because the 2 to 3 year guys are usually the ones that know Bitcoin very, very well. If they've held for that length of time, they usually know it very well, and they usually take profits at good points. So this was the first thing that did alarm me. Let's now look at addresses. So now we'll look at wallet addresses. So this basically here is how many new addresses are there that have more than 1 Bitcoin in value or balance. So as we can see, we've got an uptrend from, say, June onwards after the big breakdown. We have an uptrend. So this is still sort of small retail buyers, because it's only 50, 60k. So these aren't considered big fish. Big fish is the 1k to 10k, maybe even the 100. So let's now look at, so that one was uptrending on the 1 Bitcoin address wallets. Now on 10, it's also been uptrending. Now this is only $500,000 to $600,000. This isn't the top funds or the banks, institutions. It's not those guys that we're assessing here. So these are sort of more wealthier retail traders. We want to emulate the funds, the institutions. What are they doing? And they'll fall in the 1k to 1k Bitcoin to 10k Bitcoin wallets addresses. So even 100 will probably likely see some form of uptrend. Okay, so this is now more neutral. We've had a general uptrend, but some dips. We had a little bit of a dip here. So this should start to alarm us and say, well, hang on a minute. If because you're now starting to get into decent money, where these guys have sort of between $5 million and $6 million dollars worth of Bitcoin. So this should now start to alarm us and say, well, okay, if the 1k Bitcoin addresses are now going down and are a steeper downturn than the 100 Bitcoin wallet addresses, that should say to us, well, those guys are taking even more risk off the table. That should again concern us. So let's have a look now at the 1k to see if they're decreasing even more. They never even increased, and they've just taken a bit of a step down. Nothing major, but enough. So that's something definitely to watch for. Let's look at 10k. Okay, 10k is okay. It was falling downwards, and we've had this spike up. So that spike up is actually really nice to see. So again, this is the first. So me looking at this, not yesterday, a few days before, I was concerned. But seeing this uptick here and seeing the exchange net position change, the most recent day, have a slightly more increased red line or red spike, this is now saying to us, well, maybe this price dip might start being accumulated into rather than selling. So again, we'll have to keep assessing this. But if we see the selling sort of stop or no more spikes, and we start to see the accumulation, so the net position change, continue with the red spikes, and hopefully we see the red spikes increase, suggesting us that that net change is actually increasing, then we can return to a more bullish state in the short term. Let's go to now. Okay, we've done this. Okay, so now moving off the on-chain, let's look at some general market stuff. So this is an article on the futures open interest. So at the moment we're seeing a lot of open interest in futures, which basically means that the market is getting sort of there's too many people trying to use futures to long Bitcoin here, and we're seeing the price go down and the amount of leverage in the market increase. What this usually does is lead to a big flush out, which I thought if we got a break of 55.7, we might see that flush out. We've seen a bit of a flush out. It's gone to 54.7, but I'm thinking, we might have got a more violent. Let's go to the 4 hour. We might have seen a more violent flush out, maybe to something that fills our orders in this box here. But anyway, that tells you the state of the leverage in the market. If we look now at so something to also talk about, which is another reason why I was overly started to become not bearish, but mindful and cautious, and de-risk a little bit late last night and the day before, is that there's something in the Bitcoin market called it's in general markets as well, but it's called a cash and carry trade, which a lot of the big institutions and funds do. So now what this is there'll be a price discrepancy, so there'll be a spread between the spot value of the asset, so Bitcoin being the asset, and the futures contract. So say the spot price of Bitcoin is now 54,700, as you can see on the screen. The futures one might be something like 55,300. So there might be sort of like 3, 4, 5, 6% increase on the futures contract. Now, what the institutions will do is they will buy the spot, so they'll buy Bitcoin spot market, and they'll short the contract. And what will happen is, at the expiration date, this spread that was 5-6% will now decrease to about 0 to 1%, and they will basically pocket the difference. And that what they will do is basically get that 5% will be paid out to them. Now, what's happened with this is it's flipped the other way. So it's flipped to the point where the futures contract is not running at a premium to the spot value. It's now the other way round. So that to me is saying that they're longing the futures contract and shorting the spot, or selling the spot. So that's not something that's good for us to see, and it may stop us from basically having one of these big pop outs, which is what I think perhaps we got here, is that the big institutions would have loaded up on their sales. That's basically what I think. And this cash and carry trade usually can bring in about 24% a year for these institutions. And the gold version of this, so the gold spot versus gold futures, brings in about 0.9%. So that shows you the difference of how these funds might flock into that trade rather than the gold version, because returns are so much higher the risk is close to zero. So the only risk that is actually really in there is if Bitcoin went to zero and the exchange couldn't pay you out on your winnings. That would be you're earning the spread regardless. So it's pretty much a risk-free trade for those guys. So a free 24% a year. Most of them are saying thank you very much and they're taking it. So let's move from that to now more general stuff as well. So we saw with let's start here actually. We saw with when we were trying to break through the downtrend line, we were in this sort of big wedge pattern. Hang on, sorry, it's very slow. We were in this big wedge pattern. We tried to get these big breakouts, and we got these wicks, but the wicks then had like sort of nasty rejections and closed below. And a few times it was down to basically not great news coming out, and this was one of them. So Jerome Powell signals Fed could speed up tapering to bond buying program. So I don't know if how many of you do or don't know this, but I'll explain it in full. Which is when COVID happened, the government needed to stimulate the economy. This is the US government needed to stimulate the economy, so they gave out stimulus checks and they basically started a bond buying scheme. It's not a scheme, but whatever. I don't know what the right word is for it. But basically what they do is they inject cash into the economy by buying up the bonds. And what this does is props the stock market up a lot. Now what's happened over the last few months is we've seen the inflation go to quite significant levels. So now this inflation has gone to those levels, the Fed have to step in and say, well, we can't just keep printing more money and buying the bonds, so that's their way of getting it into the economy. So what they've had to do is they've had to start tapering, which is, so every month they were putting $120 billion into the market every single month. So as of last month, they only put in 110. Next month, they put in 100. Following month, 90, 80. So they will start tapering it down. Now, because of inflation having increased as much as it has, they're now saying they might even begin to speed this up. So, and that news came out, I'm pretty sure, in here, which is why we had the breakout. The news came out at the American market open. Bang, we came straight back down. And this piece of news here was due to the fact that because the labour market report was supposed to come, was it the labour market report? I'm trying to think of what it was. No, sorry. This first one here was due to the new COVID variant coming out. So everyone then thought, maybe he'll calm down on the tapering and he'll continue to print the money. The second one came in the fact that he came out, inflation was high, and he basically said no, he's going to speed up the tapering, which is increased bond buying. So this is not good. Well, it's not good for the markets. It's healthy for the economy, but not good for the markets. So this is why we had the second rejection here. This wasn't even the third rejection, but why we got this today is the labour market report came out. Now, with this, they expected that the labour market would be poor. So if the labour market is doing poorly, that would basically then mean that the Fed has to step in and keep printing more money, keep buying the bonds to keep the markets afloat because the labour market is doing so badly. But what's happened is, and we'll go to this article now, is that we've seen that the amount of jobs that were added were low, but the unemployment rate fell considerably. Now, because it fell to levels that aren't too dissimilar to pre-COVID, so that's actually positive for the economy as a whole. So this is another signal to the Fed that they don't need to continue with the bond buying. They can actually continue tapering to bring back the inflation because that's their job. So what they'll then do is they're now saying that they're even considering to start raising interest rates again. Now, with the rate increase in interest rates, that now means that the cost of borrowing money has increased. So more money, so there'll be less money being borrowed because the actual cost of borrowing that money has increased. So again, this is something that is good for the economy as a whole, but in terms of the stock market and the markets in general, this is bad. This is not a good thing. It means that likely things are going to come down rather than go up because there's not heavy injections into the market like there was a year or so ago. So this is all the things on the economy front. It's all the things on chain and sort of building our picture for what's actually going on here. So now we've actually got all that. Let's move to some charts. So forget Bitcoin for now. Let's move to the CME. So I did a stream on, I think it was Monday night. I don't know, maybe someone will correct me. I think it was Monday night. But I said in there that we opened, yes, it must have been because we opened with a gap. So from the weekend, we opened with the gap there. And as you can see, most of the time, had a gap here, filled. We had a gap here, filled, and then it went. We had a gap here, filled, gap here, filled, gap here, filled, gap here, now filled. I did say big gap between the candles, showing the difference between the open and the close. And I mentioned in the stream that this would more than likely be filled at some stage or another, and that's likely what we're getting now. So we could see this and the pivot here act as support. So that's one part. Now, if we look at Bitcoin on another chart, go to the daily. You know what? Let's go to the 3 days. Sorry, it is a little bit slow because I'm running the stream alongside it. So you can see here, these are the main trend lines set all the way from, sorry, my laptop's in the way, from March 2020. So this is the main master trend that will just keep going, hopefully. I don't think we should ever be breaking this. If we do break this trend here, as you can see, it held once, twice, which is good. We could fill this box here between 46 and 44. But we could just bounce off the trend, which is why I'm saying, and our orders are between 50 and 53.5. So, and there is a key box area in there. So that's going to act as some form of bounce more than likely. But what it will do is it will, you might see our box is about here. You might see it bounce to there and not be able to hold the trend and then close through. And that will be a form of it'll be a bear flag on a large time frame like this 3-day chart. That would then potentially cause, if it broke down, to fill this yellow box in here. If that area doesn't hold, we'll likely be going to test this pivot here. But in this big box, you'll probably more than likely get a form of bounce, bear flag, down again. But if this trend line does break, you can come all the way down to 30k. I think it's very unlikely. I do think it's very unlikely. But, I'm not sitting here shilling you, this is all going to go to the moon, blah, blah, blah. I have to be completely honest with you guys. And if you're going to trust us from January onwards to be a paid group, and you want your money in crypto, well, I have to be giving you the brutally honest opinion of what I think is going to happen, whether things go up or down. And hopefully with our challenge, our 2K challenge, if things do go down, we can take risk off the table and start doing some shorts, and that way we'll make up the value there. So you should always be, generating money over the long run. But yeah, that's the possible situation so far for Bitcoin. Yeah, let's look now at ETH BTC. Now, with all this in mind, we did see ETH BTC, zoom out slightly, close above this weird wedge pennant type pattern. It had this nice breakout, and now it might have a retest of the trend line. And that might be over the next, I would say, it could be over the next sort of 2, 3, 4 weeks. I'm not bearish on Bitcoin in the short term. I'm not bearish on Bitcoin in the long term whatsoever, and probably not even in the midterm. But I'm thinking for December we might have a negative month. But it may be the case you have 2 or 3 bad weeks, and then you have a real big last week where it kicks up again. Both ETH BTC and the market as it is now, I think we could see a retest in the border and then a ping up from there. Let's look at, Christ, this is slow. Sorry, this is very slow with the stream running alongside. So this is the big caps index. As you've seen, we've got the breakout above. This is now, it did do an all-time high, but we've had the rejection. So what you might see is a move down to here, a build up on the horizontal support. You may even just might even just come back to this level here, where we are, and then have a bigger breakout from there. But again, you might see that consolidation or that slight pullback over the next 2 or 3 weeks. We might get a decent rally into the last week of December and then into the new year. But at the moment, Powell is killing he's not killing the stock market, he's doing his job. But all that stuff is negative for the markets, and it does affect Bitcoin as well. But this is why we might see a sort of downturn in the next 2 or 3 weeks. But, we may even get back to this one. We may even get a move on the trend line, and we do have one of our boxes at the trend line. So that might provide a really good bounce area. We might bounce from there and kick on. So I would say that we want to be taking risk off the table where we are. We want to be rebuying in maybe this area or this area if we get there. So the mid 40Ks or the late 30Ks, depending if we go that low. I personally don't think we'll go there. But if we bounce here, or if we reclaim the 61K area, then I'd say we're good enough to go and we can just reload there. But let's jump into more of our charts. So I've explained Bitcoin quite a lot already. Sorry, it's a 12-hour. So, as you can see, we've had this pullback in here, and I did say last night that I was worried about this, and we could see a pullback, and that is what we're getting. We had too many failed breakouts here, and regardless of the news, they were failed breakouts, so it's not great. This is our main key area where we think, well, I will personally have orders here. They will be from 53,400 to 50,700, 50,700 to 53,400. I will do larger orders towards the bottom so that the more orders that do fill, assuming it comes down, the more orders that do fill, the lower my average entry. I do expect this to be some form of bounce area. Even if we just get a move up to here, I will recalculate orange boxes, which, as you guys know, here, act as resistance levels. Here we were positive, which is why we thought we were going to get the breakout. So we got to close above. But I will calculate new orange boxes if we do go down here. For now, these are still the main ones because this is still the low. We haven't created a new low yet. So let's see what we get, see how we play out, and we'll go from there. But let's look at a few more to go through. So Ethereum's fallen off quite a lot. To be honest, this is the main zone I think it can go. But Ethereum is still so bullish, so I wouldn't be surprised if it didn't get there. Because if we had a bounce, say, if we had a bounce on Bitcoin at 51, 52, I think this might go 4K again. It might go here. It might refill this box. Let me just make something clear as well. The boxes that I draw, you only play them once. They're only good to, I know this here, you've got a fill and then a move up there, but we only played this one here. What we like to see is it just touch into the box, it have a small bounce up, come back down, refill the rest of the box, make a lower low, but make a bullish divergence, and then we get a nice kick on from there. But that's ideally what we'd like to see. But let's see how we go. For now, Ethereum, I'm not really doing anything. Let's go through the list that I've made. So Solana, good job we exited the trade today. I think we got an average price. Entry was 222 and the average exit I think was 233. I might be wrong. I'm trying to remember off the top of my head. If someone in the chat can correct me if I'm wrong. But yeah, we made good percents and good job we did get out of it because this is now what's happened. Matic still an absolute monster. It's not even looking like it's coming down. Oh, sorry. Solana, back to Solana. In terms of an area where I want to potentially refill on this, this is my area. This yellow box. We didn't get the move in here. This would be the. I think it may struggle to get down there, but that's where I think if I would place orders there and just say, you know what, I'll place orders, forget about them, and hope I get some fills basically. Yeah. Now moving on to Matic. The exact same story for here. I place a small amount of orders, see if we can get the fills. Yeah, and we basically go from there. But as you can see, we did fill in this yellow box here, and this is what I mean. You've got a small fill, a fill here. No, that didn't create a bullish divergence actually. It did from here to here though. Yeah, it did from here to here, which was good to see. Which is why I think we filled on this candle here. Yeah, we filled in there. I think we had an average price of 156, and we had an average sell of somewhere in there. I think we sold some in here and then some back in here. So average price was about 170. Again, if someone can look at the trade setups and correct me, then fine. Obviously, we probably should have held, but at the same time, you know, we could have had that same opinion with Solana today, and we would have been stop lossed out. So it's always good to take profits when they're there, and especially when you start getting signs of weakness. So Chainlink, this is not great for Chainlink. I'd be worried about how low this can go. I'd say at worst ways, the next level will be $20, not $19, $20 in here. But for now, I'm not too heavily interested in this one just because it's just not shown any signs of bounce or anything really. So for now, we just leave it. Right, if we do move on to 2K challenge, BNB has held a long-term uptrend since the end of September, and you can see it's not been able to get above. It may be time to de-risk slightly here, because we may get a break of this trend line and a fill of this box here. As you can see, yellow and green boxes together work really nicely. So we filled orders here and we got some sells in here, I think. I can't remember off the top of my head. But it might be worth de-risking some of our position here, which we'll go over in the 2K challenge on Binance. And we'll, for all those that are watching the stream for the first time or for a new time, we set up a $2,000 challenge in which we'll try and trade it and get it up. We actually did start it when Bitcoin was like 65k, 66k, and I think we're only down about 12%, and Bitcoin's down about, well, after today, about 22, 23%. So we're not nowhere near as down as what the market is, which is good. That's all we really care about. And then when the market goes well, we should outperform the market. So we're all good. But I'll make some changes to BNB for that 2K challenge. The next one to check is AVAX. Now this is one we like and we want to get involved in. So I'm going to leave some orders in here between 93 and 87. Again, this is something on the 2K challenge. We do have some USDT there, a small amount, but we'll cash out of some BNB and we'll see what we can do. But I will fill orders in there. I like AVAX. Yeah, I may even leave AVAX for now and try and calculate a lower level. But either way, we'll fill some orders here, potentially some about here. But I will rechart this. I'll add it to Watchlist as soon as I'm done with the stream. Let's look. Luna is another one I'd like to get involved in, but you know, that's tricky. Personally, this box this is not going to fill. But this one here, again, you could consider leaving a small amount of orders and see what we do. But we did get on bigger time frames. Bearish divergence, bearish, 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 and not quite. This invalidates the bearish divergence, but we are getting a big tick up again here. So it's not too bad, but it's still quite oversold. And look at the pump. You definitely don't want to be chasing this. That's for certain. Yeah. Let's look now at Polkadot. So this is where I'd want to leave orders and potentially consider adding to our position that we already have. I may even de-risk some of this, so sell some and try and add in here. Next one is curve. I don't think we have any curve. No, we don't have any curves. This will be a nice one to add into. And look, we'll place orders here. I don't think we'll get the fill, but it might be worth trying to get the fills. We'll do a small amount of dollars, so you know we're not. Let me just write this down. So far we're going to get rid of some BNB. We're going to take away. We'll take away a very small amount of link, and I believe that's it so far. Yeah, that's it so far. We're going to add to AVAX, but I'll come to that in the watch list later. I'll try and recalculate new levels. We may add some dots, and we'll de-risk some dot and try and buy in lower, and we'll try and get some curve. Yeah, and that'll be it for now. But let's have a look at some of the plays. I know you guys pester me all the time for these ones. Sand, the box is all the way down there. That if you want to play sand, personally, 2K challenge, I'm not playing sand. I'm sorry, I'm not involved in this. I'm not doing it. You guys can play it though. These are levels I drew. I'd be trying to fill, 30% of your orders in here, 70% of your orders in there. Another one is mana, starting to fill. I think this is it's broken a core trend line here. So I wouldn't play this box. I really wouldn't. I would try and play this one in here. You can fill maybe 10, 15, 20% of your orders here and fill the remaining 90, 80% of your orders in there. That would be the way I'd play it if I were you. We're looking to get an average entry of somewhere in the early threes. But for now, see, Bitcoin's in the 53, so we're nearly filling our box now. I personally do have a short open, and I did short a 57,000, a leverage short. I posted it in the general chat today, and I'll post the profit of it. The reason I don't post these regularly is because when I do post leverage shorts, I get some people message me saying that they've sold all their spot positions because I expect the market to go down, and this is not the point of doing the leverage shorts. The point of having money in leverage and money in spot is that 80% of your money is in spot, 20% are leverage. Say your 80% value is in spot and the market corrects 10%. You've now lost, in theory, 8% of the value you had the day before. Now with the leverage, 20%, you should use that to try and make up at least 4 or 5% of the value you haven't lost, but the value that you've that's decreased in your spot balance, basically. So you still keep hold of your spot allocation. You do the leverage shorts to almost hedge against the value you may that may decrease in your spot balance. But once, I think from January onwards, when a lot of you guys know we're becoming a paid service, that we will potentially even have two tiers of member, and we're thinking that the leverage shorts may be for the top tier members. But this is still just ideas. We're still trying to work it out and get our heads around it. But yeah, it's just a general idea for now. But let's see how we do. Yeah, okay, let's make some changes. So Matic, let's sell some Matic because it's gone up so much. So this is our 2K account. We have $1,500 in fiat and spot, and then 200 or 300 in the futures. Let's leave the futures for now. We'll put on orders to potentially fill our box. But let's go and sell. Let's sell half our Matic. Sorry, it's very slow. So I think we have $150 in Matic. Might be. Oh no, we have 150 Matic. Okay, that's cool. Let's sell at 1.8. We'll sell 75 of them. Let's hope to get some fills. Yeah, we've got some fast fills at 218. So you guys, if you're watching this, you can do it off your phone. Let's go back to wallet, fiat and spot. Come on, very slow. So we have some more USDT. Polkadot, we're going to sell a small amount of. Right, I'm not going to, because actually I will do it, because some of you guys will want this, and some of you guys that don't want this, you can just go off the stream, or if you're watching the replay back, you don't have to stay for this part. But I'm going to basically sell off some of our positions, and then look to add orders for new ones. I will post in the watch list where we're looking to fill. Actually, I may as well do it here. 33.75. We've got 7 of them. We'll sell 4 of them. Yeah, we'll sell 4 of them. And let's go back to DOT. No, I won't add the orders now because I want to see how much USDT we've got left, and then I'll reallocate it after that. But I am conscious that the stream is getting a little bit long. I don't want it to be more than sort of 50 minutes. So let's go back to where we were. I'll sell some DOT, wallet, fiat and spot. We sold some DOT, some. Oh, we haven't sold the BNB yet. Again, I'll be honest with you. I probably should have made this more significant. I did do all of this not yesterday, the day before, in my own personal account. But again, I don't want to stress too many changes to you guys because it's important in the spot account. You are holding for the long term. BNB trade. You know what we've only. Yeah, let's still do it. We'll sell half and we'll try and re-add. We've got 0.3, so let's do 0.17, which is half. 92, 93, so it'll give us the 93. Yep. wallet, fiat and spot. I think we have now just to sell some link. And what I will do is I will do the futures placing the orders. The rest we will leave. Just trying to see what we have. Are they Doge? All fine. We book some profits. The massive profits will be very big, so that's good. Link will this is a good long-term play, so we'll hold it for the long term. What I'll do now is I'll move to placing the leverage long for Bitcoin. It'll be a very small order, but we'll see what we get. I will post because now we've got $500 just in Tether in USDT. So what we'll do is we'll try and reallocate that into these boxes. So the yellow one for DOT, we'll try and pick up some AVAX, we'll pick up some Curve, and we'll try and re-add to our BNB all at lower positions. But this is good. I'm quite happy. Don't be worried when the market is going down. Look at it as opportunities. But all in all, this is good. Let's do the derivatives long. 54s. I was hoping we'd see 53s. 54 ones. So we have what do we have? 228. So let's do, we want to do size in US dollar. Come on. We want to do at 50, we'll do it 53, 52, and 51. 53,000. We want to do, say, $50. No. We want to do $50, 90 and 90. It's 180. It's 230. It's too much. We'll do 45 and then 90, 90. So 45. Stop loss we're going to do is 49,000. This is at 10x. Like, oh, it needs to be 450. So it's going to cost us 42.5. But yeah, let's do it. 53. Now I want to do 50 entry price of 52,000. We want to do $900 because that really is a cost of 90 or 88 in this case. Stop loss again of 49,000. Click buy long. We'll do the same on 51,000. We'll do 900 again. It's 86. Let's just do 900. 49,000. Buy long. Okay, well I think that's it. Hang on, I'm just reading some of the comments. Yes, I can view the overview, wallets, fiat and margin. I would say go back through the video and watch the video and see what I've done and pause it at different stages and try and take, because obviously you won't have exited at the exact same points or prices I've exited on here. So you might be better or you might be worse, but it should only be 1 or 2% in either direction, which is okay. For some of you equity people or normal stock traders, that sounds like an absolute ton, but crypto it's honestly nothing. But this is what we have so far. This $500 we will, as I said, we will reallocate into new positions, hopefully at lower levels like DOT, somewhere in here. We will try and pick up maybe some more Solana, somewhere in here. We will try and get some some AVAX, somewhere in there. I'll try and recalculate at a lower level as well, and I'll tell you exactly what areas I've allocated this. I'll tell you exactly what coins I've allocated the dollars into, the USDT we have spare, and at what prices and at what zones I've allocated the dollars to, and how much the dollars I've allocated to that one box. But I think for today, that is everything. So yeah, unless there's any questions, I'll wait 10-20 seconds just to see if there's any questions. Come on, don't be shy. Any question? I don't think we're going to get any questions. But if you do need any, if you do have any questions and need some answers, just message me in the Discord group or just send it in the general chat. But overall, that's it. We're done. I hope you enjoyed the stream and enjoyed the level of detail that you should now have got from everything that we went through today. And as I said, we're thinking in January we may have 2-tier systems of membership, and this will likely be this will be for the paid members, because it's important. I know you guys all have normal jobs and stuff, so we're the guys sitting behind the computers doing all the research for you whilst you're in your jobs. You can come home at night. You might get 2 or 3 streams a week, maybe even 4. I'll provide, if you're really busy and you can't watch all the streams, I'll provide summaries of every stream I do so that you can quickly read it. It takes 60 seconds to 2 minutes to read the summary of the previous stream, and you can get right up to speed and watch the following stream that may be that night or the following day. Other than that, that's it though. I hope you guys enjoyed it, and yeah, have a good weekend.